Hello, this is Patrick White from AA Commodities and Investments of Spencer, Iowa, with your October 3rd market recap video. As you can see here, we had a higher day in corn, up 1 cent at 3.88 3/4 in the December contract. November soybeans were lower on the day at 2 cents lower at 9.11 3/4, and D Chicago wheat was down 1/4 cent at 4.88 3/4. I'm going to go ahead and get it started off with a disclaimer. Just remember that everything I'm talking about here is not a direct trade recommendation, anything like that. It's just my opinion. If you'd like to read the full disclaimer, please pause the video now. So as you can see here, we had a pretty light, mixed day for corn, soybeans, and wheat. Seen a pretty good rally here these last couple of weeks just off of the China purchases, breakthroughs on trade. South America's been dry. We've had pretty decent export sales, especially on the soybean side of things. So with that being said here, I did send out our second advantage alert here on October 3rd. And so you guys should have seen that, but really just the market's had a nice push up here, and we've seen, just a nice little rally here. So certainly time to manage your downside risk there in soybeans. And also yesterday we sent out the advantage alert in corn there. So this is the second day. Tomorrow will be the third there for corn. So just make sure you're taking a look at cash prices and seeing if they work for your operation. And if they do, it might be not a bad time to get some, take some risk off the table and get some sales made. So. With that, let's jump into the charts. D's corn, taking a look here, we've really done a good job of rallying out of this sideways, consolidation area up at 375. We've gone up. We haven't been able to get above this 393 level. And the 393 level, if you'll remember, was this gap level here on August 12th. So we went up and we filled that gap in, and the market's, just kind of tailed off since then. Not a whole lot of news coming out today here, but, on Friday, the Trump administration is announcing just a new kind of plan for biofuels, for ethanol and biodiesel. So we'll be looking at that. That's why, corn really wasn't able to sell off here early this morning with, the disappointing export sales of only 400,000 tons. And we've kept buyers in here at 385 just due to that announcement. So we'll see if that'll give us a surprise here tomorrow. But other than that, not a whole lot going on in the corn market. So soybean side of things here. Kind of an interesting day. There's a lot of news as far as export sales go. I think we have 2.07 million metric tons of export sales here this last week. Of that, about 1.55 million, or 75% of that business, was from China. And there was another flash sale this morning of, I believe it was 250,000 tons of soybeans there. So pretty interesting. A lot of export sale business. And I guess the Chinese, they're telling me that the Chinese are buying, smaller tranches of soybeans in order to not run up the market on themselves. So with that being said, here we were a lot lower earlier this morning at at the open, but the news of the export sales kept us off our lows there. So closed at 9.11 3/4. We had a low of 9.08. I still think we're probably going to go down and test this 9.05 region before we can go back up and test 9.20. But kind of a wait and see there. The thing that's really leading soybeans, well, I shouldn't say it's really leading it today, but the thing that's really leading higher here in the soybean complex is soybean oil. They had a nice day. Geez, one of the best days they've had in recent history, up 68 points here. So really nice to see that day here in soybean oil, and that is off of the announcement that the Trump administration is going to change up some things in biofuel policy. So we'll see what happens there tomorrow with something to note. Going in here to the wheat market. Chicago wheat really has struggled with this $4.98 to $5 level. We did get above it on the 30th there of September, but obviously there's some selling pressure up there. Haven't been able to really sell off that hard. For the low 490s to 485 has kept us supported here in Chicago wheat. So, not looking for a whole lot here. Export business has picked up here, but they're still just our usual customers. Nothing huge out of Egypt or the Middle East, anything like that, of those major buyers. So it's kind of a wait and see here. Typically Chicago wheat has followed world prices, so we'll see where they go from there. Minneapolis wheat really hasn't been doing a whole lot. They went down and broke the 531 level on the better weather report for the 6 to 10 and 8 to 14 day forecast. So but really just been hanging around this 530, 531 support level. So we'll see if this rally back, can they regain this 530 mark and rally, or are they going to continue to roll over in spring wheat? So something to keep an eye on there. The cotton chart. This is one of my favorite charts to see here. We had this nice push up went up to this 62.66 region, and that's the level I've been talking about in the newsletter, and came back down, tested the $60 mark where we initially broke out of over here from the August highs, and now we've rallied right back up to the 62.66 mark. Obviously, as you can see here, today they found sellers up there, so there is definitely selling pressure up there, and there is pretty solid resistance there. If we do break above basically 62.66 to 62.75, we're probably headed up to 64.75 or this old high that we saw last July. So certainly supportive for the cotton market there. Livestock here, let me take a look. We're going to go ahead and take a look at the D-Live cattle chart. Been pretty impressive here. We were able to bump up above 110.50, but the market's not running away as fast as it has in the past here. I'm going to look for more resistance up here at the 111.90 region and then maybe 113 area. That's where we've seen sellers in the past up here. But this is the highest close we've gotten since I believe it's August 8th. So most of the I guess all the gap is filled in from the Tyson fire down in Kansas. So really nice to see this in an uptrend. I guess if you do start to see lower closes, especially below this like 107, 108 level, 107.80 to 108 level, I'd start to be concerned. But other than that, it still looks like the uptrend is going to continue here in live cattle. So going into the hog market here, this morning they had disappointing export sales at 34,000 tons, and that was for both 2019 and 2020. So the market's just been falling these last 3 days on the disappointing export sales, and just really this market is dependent on export sales, whether that be from China or where else. But we just need definitely better export sales, or the hope at least of better export sales in the future to keep this thing running up, because just our higher supplies of pork and pigs, domestically, the hogs and pigs report show that we've got higher supplies than most traders thought. So with that being said, without exports, the market just kind of collapses underneath itself, if there's not that. So with that being said, though, I think we're probably going to have a support zone between $66.50 and $66. That was kind of where we broke out from in this initial range here. And if we do break below this, we're probably going to head right back into the same old range that we saw in August and the first part of September. If we are able to get support, I would take a look. I would be watching for the downtrend line here to get broken before we head on up to 74. So that's about all I got. If you guys have any questions, feel free to give me a call at 712-262-7606 or visit us online at aa-commodities.com. Thanks for watching. Have a great day.